Good morning, everyone, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I am here with my father, Carl Swenlin, and we are going to let you know what's going on in the market, show you the charts that are important to us right now, and then we will be taking your symbol requests at the end of the program. So let me give you a few more pieces of information. The Q&A box is where you're going to put in your questions and symbol requests. The chat room is for you to go in and talk amongst yourselves. I do have a moderator in there, and he will be saying hello any moment right now. So go in there and have some chat time with fellow traders. And again, Q&A box is for us to see your questions and symbol requests. And without further ado, I'm going to pass it over to you, Dad, and you can let us know what's on your mind.
Okie doke. I'm going to start out with an ETF that a guest on Fox Business recommended. This is not a recommendation, but this is quite an interesting vehicle here. Its the symbol is TSLY, and it's basically a Tesla Option Income Strategy ETF is what it's called. And it's based partially, at least, on synthetic covered call strategy. What makes this thing interesting is that it's currently paying a dividend of about 65%. Per year. Yes, that is quite amazing. And of course, we don't have a full year operation on this yet. And the 65% is based upon annualizing the last dividend, which was 83 cents a share. So you can see how you could make money on this. What I haven't figured out is how you can lose money. And I don't know how reliable the making money part is. I just say it's an interesting vehicle worth taking a look at. But I certainly, again, this is not a recommendation. This is just, look at this. What do you think?
Yeah, it caught your eye.
Right. And incidentally, it appears that it follows, this is Tesla down here. The first panel below the price, and this is the Tesla. So it appears that it follows Tesla's price. So, of course, that is one way you can lose money if you buy high and, it goes down. Okay, let me get rid of that and go to, let me do the Magnificent Seven. I did an article last week, and on NFLX, just where we are right now. We've got Apple. It's down about 10%, and it's currently forming a reverse flag. This is a pretty good level of support here. It's touching a number of times. Prices touching that, but it's broken a rising trend, and let's look at Amazon. Amazon was coming back to a trend, and then we had the gap up. Right now, we've got an island reversal potentially in progress. And so there is a potential for it to gap back down through that gap. Google is another one. Island reversal, question mark, we don't know. Saucer with a handle is a bullish formation, and island reversals. I don't know much about execution rate on this things, but it's when you see that, it's something to keep in mind that it might be going to be reversed depending on what a story comes out. Meta Platforms has broken its rising trend line. It's pretty long rising trend line. It's not a decisive break at this point. Microsoft is, we have the saucer with handle formation here, and we've got the 20 coming down, getting ready to cross the 50. which is a dark cross, we call it. If you're wondering where that we got the name dark cross, I'm not sure I told Erin, but my son, Erin's brother, used to be one of the original writers on Darkwing Duck at Disney. So maybe that's where it came from. Yeah, one of the problems, we've got really high PEs on these stocks. Right now, I've got a head and shoulders formation on Netflix. You can see these swooshes here, basically emphasizing when price is rising a little too fast. And when it does that, it begs for a correction. NVIDIA, here, this is the champion on the gains from the AI story. I find it strange that we went months hearing about how AI was going to destroy the world, and suddenly it's going to make everybody rich. So take your pick. There's one of those cases where you get an increase in the rate of advance, very steep here, and it's correcting back to this rising trend line. This is also a gap up situation, which could ultimately gap back down through there. Finally, this is Tesla is the extra in here. This is the plus, and it is currently in a downtrend from this July top. My opinion on electric vehicles is they have seen their day, and I think I've been hearing reports of inventories building up in the dealerships. I've been driving a gas-powered vehicle for 60 plus years, and I've never worried about it spontaneously combusting in my garage. But I think that's a problem with the EVs. When out of the gate, that's a big problem. Okay, let's go to market analysis here. Let me start with the chart of the S&P 500 ETF. Okay, we've got a gradual downtrend here from the July top. That was a big day because the market was up there and it reversed and closed down, which pretty much put a plug in the jug. Got nice support right at this level, and it's a gradual. It's only down about 3%. Looking at our primary indicators, the Swenlin trading oscillator for breadth and volume, there's short term, and notice that they've been rising for 4 days. We're not getting much of an upswing out of that short-term bottoming. Okay, the intermediate term indicators, intermediate term breadth momentum and volume momentum, they've been falling from the July top, and we're not getting a very violent downturn on this contraction in the intermediate term indicators. But I think that we're going to keep going below the zero line here and possibly get something this steep, which should bring us more downside. We've got the combination of negative seasonality plus the topping of the indicators. And so I think it's going to be rough going for a few months. Looking at our bias assessment, here's the Silver Cross Index and the Golden Cross Index. Silver Cross is percent of stocks with the 20 above the 50. Golden Cross is percent of stocks with the 50 above the 200 EMA. Okay, so good high readings, but Silver Cross is dropping. the potential downside for the silver cross at this point, you have to have the price below the 20 and the 50 to get them to cross on the downside. So right now, 54% of stocks have a price below the 50. That is right now the maximum downside potential based on current conditions. For the Golden Cross Index, it's at 69%, and the highest of the 50 and the 200 readings here is 265. So currently it could potentially drop another three percentage points. But if the silver cross continues down, we're going to get more downside on the Golden Cross. Let's look at the four. We've got the US dollar. Had a nice strong open today, but it's dropped. It was above this resistance line. Now it's dropped to below it. This would be good news for gold, which was down earlier and is now recovering. We had a saucer with handle here, which at this point I had to abandon. Right now we've got price within this trading range with support coming up. Erin reminded me to keep these things centered. Here is USO, crude oil. We've got a rising wedge, which usually breaks to the downside. So it's creep outside, it's creep below the rising trend line and probably going to go lower. Treasuries rallying somewhat today. Basically, it looks like a double bottom here right now. Long term, I'm looking for treasuries to trend downward. The 10-year treasury yield rallied early in the day. Now it's down slightly, but it's in a rising trend. Rates in general in a rising trend. This is everything from the 1 month to the 30-year treasury. We're in an inversion where the lower durations are yielding the highest. So we have, this is as of Friday, we have the 1 month and the 3 month at 5.5%, and the 1 year 5.36. So they're in a rising trend, but I couldn't say exactly that we've broken out of this range yet. Bitcoin rallying today, but long term, it's not encouraging. But it's in a rising trend with a rising wedge formation currently in command. So we would expect it to break down out of that rising wedge. And let's see. Can you read that first question?
Yeah, I will. So, and this talks about lagging indicators is basically going to be the answer here. But did your DP alerts that become reliable contrarian trading signals, whenever you send dark cross or death cross or buy crossovers, a few days later, that sector starts to move in the opposite direction. Maybe you should follow Tom Bowley, blah, blah, blah. I'll just finish that. I love Tom Bowley, and I think that his service in conjunction with ours would be very powerful. But really what I think is going on there is that, especially with a death cross or a dark cross, there are lagging indicators. And I think you would agree with that. But it does give you a certain bearish bias when you start to see those. So it's important to keep that in mind when we do get those, and which is why we talk about them.
Well, another thing here is that we've got the prices have been moving sideways for the sectors. And every time we report a crossover, we have to couch it with the pointing out that it's a trade. We've been in a trading range and we've been flipping back and forth. We've had, I've seen as many as 7 that I think of right offhand, crossovers within a year. This is not the usual thing. And again, we say these buy and sell signals based on the crossovers, they're information signals. You've got to analyze the chart before you take any action. And sometimes it works this way.
Right. No, that's a really great point, because I know a lot of the sectors in particular are in a lot of them are in trading ranges, and that of course makes your EMAs start to braid, is what I call it, braiding EMAs. So they're whipsawing back and forth during a sideways piece of movement or consolidation.
There's a question at the bottom here is there any reason you are not using ADX indicator? I don't know much about it, and I have the indicators that I've settled on. It may be a good indicator for some people. I know I probably looked at it, but I didn't find it particularly appealing to me. But that doesn't mean it's not good. That someone else might find it really useful.
Right. And that's absolutely correct. I mean, I'm somewhat familiar with the ADX. I had to study it for my CMTs. I didn't find it that useful for me either. It didn't speak to me, I guess, is the way I would say it. So I don't include it, but it doesn't mean it's a bad indicator. There are a lot of indicators out there on stock charts that you can use, and I'm sure a lot of them are really good. It just depends on your analysis style.
Okay, I'll let you take it back.
All right, let me grab the screen. So what we're going to do next is I'm going to go through sector rotation and the sectors, see where there is strength, where there is not strength. We'll dive into an industry group or two and see what we can see. This is always fresh for me. So when I go through, I find those sectors that look good. And then that's when I go to the industry summary and we start looking at what industry groups have some strength. It also gives us a really good view of the interior of some of these sectors by going through each of those industry groups. We had some information on Friday or last Monday, where we had a breakout coming on financials. So we went into the industry summary and found that, banks did not look good. A lot of the finance stocks did not look good, but insurance was looking good. And that was where we were getting that bump in financials. So we're going to do something similar today as we do every Monday. First thing we do is look at our candle glance of all of the sectors so we can get a feel for where the momentum is. Currently, energy is still the darling, if you will, rising momentum, continuing breakout. I believe we'll look at that chart under the hood, but I believe that we're looking at a breakout going on here, but I can't remember if we're at overhead resistance or not. So we'll take a look at that more closely. And healthcare has been resurging here. And you can see the PMO is on a PMO crossover buy signal. Everything else, though, is not looking so hot. I would have expected to see some of these more defensive groups like staples and utilities and even real estate to start doing well, but they're really not picking up any of the slack here with technology, which is clearly the weakest of all of the sectors right now, given the deep decline of the PMO and, of course, of price. It is hitting support just like the market is now, so we could see a little bit of a bump here, but we'll need to look under the hood here as well to see if we're getting any kind of improvement under the surface. And I don't believe that we are. Let's look really quickly at the RRG. I haven't looked at that in a long time. And the last time I did, it was very helpful. So here you can see these aggressive groups right now are starting to lose steam. You can see XLY, while it is in the leading category, is heading in the bearish southwest direction and heading towards weakening. Communication services and technology already in the weakening categories. What I found interesting was to see so many of these in the improving sector and moving in northeast directions, which are bullish. And XLI actually is the one getting closer to leading. Now, this is a weekly version of the RRG. So this is more of an intermediate term look at what's going on with sector rotation. So not a surprise to see the weakening going on in XLK and XLC when you look at that candle glance we saw earlier. Let's take a quick peek at the daily version. This is going to give us a little bit more idea of what's going on currently. And it's a mess, which is why I kind of prefer the weekly one. But some of the things to pay attention to here. There's your XLE, which is just going off the chart here in the leading category. And there is XLV, which is also seeing that movement in the PMO to the upside. So it is following what we're seeing on those candle glance charts. This one right here is XLI, and it is moving in a south or northeast direction as well. So that might be an area to start looking for some new strength. XLRE is moving in the northeast direction, which is bullish, as is XLY. Well, XLY just tipped down into the southeast direction, but it's still in the lagging category. Anything that's on this side of an RRG is considered a bearish bias. It's weak, even if it is in the improving category. So we have to keep that in mind when we're looking at these RRGs. I highly recommend you go in and read more about the RRGs and give these a try. I think that they're very interesting and they do give us some extra insight. Financials, notice here, like I said last week, we were seeing a little bump in financials, and it does appear that that got things moving in the right direction on the daily RRG. But I think the most important thing is this weekly RRG and just knowing that this is where the weakness is in these growth areas. All right, so let's look a little bit more closely under the hood at some of these charts. We'll walk through them very, very quickly. I won't spend too much time on all of them because they're not all that interesting. XLC still holding a rising trend here, but as I showed you on the RRG, it is starting to see some weakness in the intermediate term. Participation kind of in the middle here, middle ground, did see a little bit of improvement last week, but not enough to get too excited about. Consumer discretionary, we're seeing loss right here in participation. It's still moving downward. As I showed you on the RRG, it is moving out of the leading category and toward weakening right now. It's holding this support level like the market in general is holding the support level, but I think it is extraordinarily weak, as I think it is for the market in general, because we do have a PMO in decline. It's putting a little bit more margin between it and its signal line. Not looking that great here for discretionary. Consumer staples, like I said, you would think that they would start getting going as a defensive sector, but certainly not really getting any traction here at all. A little bit of improvement on stocks above their 20-day EMA, but that silver cross turning over. XLE, there we go. So we broke out from this area of overhead resistance, but now we're getting ready to hit some more serious overhead resistance. It's getting on the overbought side. RSI is overbought. You can see that stochastics are still showing strength as they sit above 80, and we still have very, very strong participation. But I will tell you that I recall it wasn't too long ago, we had 100% above their 20-day EMA. So we did see just a little bit of a decline there out of those readings. But these are very overbought. The Silver Cross Index itself is at 100%. That means that all of the stocks within energy have a 20-day EMA situated above the 50-day EMA. So really good situation going on in energy. But the problem that you will find, of course, when you get to these readings is the only place to go is down. So we need to be on our toes and definitely keep an eye on what's going on under the hood here with the participation numbers of stocks above their 20, 50, and 200. XLF, like I said, you can see that little rally we got last Monday didn't hold, continuing in the declining trend. The banks did suffer last week, certainly didn't help the sector as a whole. Silver Cross Index topping. And notice participation continuing to level off here. Healthcare, this is the other sector that's actually got some promise as far as the PMO is concerned. The actual chart itself is a little bit iffy here. We have a rising wedge, which is bearish. But we didn't have to go, the last two times we didn't have to test the bottom of this wedge. So there is that possibility, in my opinion, that we could get that upside breakout from this bearish pattern. Notice that we are starting to see a little bit of improvement here under the surface for stocks above their 20-day EMA. Certainly not seeing any improvement in the intermediate and longer terms yet. So this could be very short-lived. We need to be aware that, yes, this is a sector that we might want to go inside to look for trades. But at the same time, we need to find out where the strength is in this area. Industrials, that one looked interesting on the RRG, but I don't see anything that interesting on the chart itself. We have price leveling off here, or rounding off with a rounded top, which is a bearish formation, PMO in decline. Silver Cross looking very ugly as it moves down and picks up speed. And you can see that the participation of stocks above their 20, 50, and 200 is also losing speed and declining. It is outperforming the market, though. Notice this. So that's a really good point that you should be aware of, is that these relative strength lines are very helpful. You want to find those that are outperforming the market. And it's really important to see that now, because it needs to really outperform the market. Right now, XLI is outperforming the market as of last week, but certainly not getting any price movement. And that's because the market is not doing well. So you need to really be able to outperform the market. Those relative strength lines can be a little deceiving. Materials still in decline, hit the 50-day EMA as support, but today it did dip below that. The PMO is in decline. We've got participation still bleeding off as far as price above the 20-day EMA and 50. Leveled off here for the price above the 200-day EMA, but I'm not seeing anything in terms of price movement. And here you can see the relative strength is declining. So you know that this sector is definitely not healthy. Real estate, also not healthy. Now it's stuck beneath what was support. I don't see this as a strong support area. It is forming some support here, but it doesn't really line up with anything back here. So I wouldn't count on that as support holding at this point. The 50-day EMA is below the 200-day EMA. Could be a reverse flag kind of situation here. So I'm not liking what's going on in real estate. Technology. This is definitely where the weakness is. Look at how the participation has really fallen down. We're now below those 50% thresholds, bullish thresholds on price above their 20 and 50. You can see the Silver Cross in decline. This is a little interesting here, though. The Silver Cross did kind of stop its decline and moved a little bit sideways, but seeing the declining trends in price above the 20 and 50. Also note that only 41% have price above their 50-day EMA. You can't get a 20 above the 50 if you don't have price above the 20 and 50. These are lower readings than the Silver Cross Index. The Silver Cross Index may have stopped here on its decline, but based on these numbers, it's going to resume that decline. This is really an important area of support. We want to see it turn up from here. Also, the rising trend line is being tested right now. So another serious decline here for technology, and that would really spell trouble because we would lose support and we would lose the rising trend. I still think it looks very weak. Utilities are at the bottom of their trading range. Could see a reversal here, but based on what I'm seeing as far as participation, we're starting to see a little bit of a heartbeat, but barely a heartbeat. Not anything that we would be looking for a reversal just yet, but certainly these are oversold readings and we could see a reversal eventually, but the PMO is not going the right direction. And this does look very much like a reverse flag, which would imply another decline about the height of this particular flagpole. So ultimately, we've got energy, which looks healthy but vulnerable because it's getting ready to hit overhead resistance. And we have healthcare, which has rising momentum, but also really stuck below this area of overhead resistance and moving within a bearish rising wedge. All of this is not particularly great. But if we had to go somewhere, if you made me get a stock from somewhere, it would probably be from healthcare. We do have the under the hood indicators for biotechs. So let's go ahead and take a quick peek under the hood at biotechs. They really had started to show some relative strength here, but not having the best day and still in a trading range. So while this is probably a decent area to start looking, I know that my diamond scans for the DecisionPoint Diamonds stock picks and ETF picks had been returning quite a few biotechs and pharmaceuticals, which is where we're seeing a lot of the strength. I'll show you that, the relative strength. We're starting to see a little bit of a pickup here in participation for biotechs, but still that silver cross is bothering me. It is still in decline. Stochastic's making the move and the PMO is still technically rising. It's still not the most healthy, pun not intended, healthy industry group. But let's go and see if we can't find an industry group that's clicking right now. So I'm going to go to the industry summary. This is the best place to go to see some of this. And you can see that you can go through each sector and then click through those industry groups. Here's energy. We know it's clicking. Let's just see how overbought things are, whether we're getting ready to hit overhead resistance. Looks like we got above overhead resistance here for oil equipment and services, but notice that PMO sell signal. So it's starting to get a little bit weak under the surface. Integrated oil and gas still looks very safe, still looks great, moving up higher here after this breakout from that trading range. Overhead resistance still a little ways away. This is probably the strongest area of overhead resistance, so there's still some distance to go. Exploration and production, getting ready to hit overhead resistance here. So that could be a bit of a problem, but the PMO is still rising. Pipelines looking really toppy here on a PMO sell signal. Coal is still clicking, not quite overbought here on the PMO based on the fact we got some very negative readings before. But be careful. You can see it's dipped below the 200-day EMA here for coal, but it's still in a nice rising trend. So I still think that you're probably okay if you're holding those coal stocks. So here is healthcare, medical equipment. It is near support here, but certainly nothing looking healthy about the PMO as it continues its decline, and stochastics below 20, which implies a lot of internal weakness. Biotechs, this is a little different than IBB. It's the Dow Jones US group of biotech, so it's a different universe. And you can see that this one looks a little bit more healthy than IBB does. Certainly, if you take all of the biotechs in the Dow Jones US, you're looking at a better picture, although stochastics did top below 80, which is a little bit of internal weakness kind of poking in there, but outperforming. So biotech's still looking okay here. Healthcare providers stuck in a trading range, and if healthcare already had that, the sector itself was making that rally move, and we didn't get anything out of the healthcare providers, so not a good place to be. Medical supplies, nothing really exciting here. It is holding the 20-day EMA, but this does look a little bit rounded as far as a top. It looks very vulnerable to me. Although I have to say, stochastics turning up and the PMO did kind of flatten here a little bit, but the price action isn't very impressive. Pharma was really a bright spot. It looks like it is moving higher. I read this morning that there might be problems for pharmaceuticals based on, in Congress, I think they're coming up with a bill, something about price fixing as far as pharma goes. So that could be a bit of a problem for the pharmaceutical companies. But right now, it's not showing up on their industry chart. Pharma looks the strongest right now of all of these, with biotechs looking okay, looking like a pretty good place to be as well. So the key is finding the strength within these industry groups. How do we do that? We can go here from the industry summary, click on the group of members within that group. This is the biotech space. And what I like to do is organize by the stock charts technical rank. That puts really the ones that have the strength in the intermediate to longer terms. Those are the higher scooter numbers. So we want to pay attention to what's going on. Now, I would say that while the top ones are showing a lot of these are showing a lot of strength, a lot of times you don't want to go necessarily here to go fishing, mainly because their rank is so high. And as I said earlier, when you get these readings that are very high on indicators, the only place left for them to go is down. So really what I like to find are new momentum stocks. So I like to arrow down here a little bit more, go down into the 80s. You can hold your mouse right over the symbol, and you're going to get a mini chart. So that helps you find the ones that look strong. So MedSpace looking strong on a breakout, probably very overbought. Yes, overbought on the RSI. PMO is flat. That's not necessarily a problem, certainly not a problem here. Mainly it's done that because the momentum has basically stagnated. It's the same momentum moving up. And so that's going to make your PMO flat because there's no new momentum coming in.
But it's steady.
It's steady, so that's a good thing.
Yeah.
Don't like that big decline. Trading range a little too low. That looks like an interesting one. Let's see. This is very thinly traded, so I'm not interested in that. Excelis, this was a prior diamond last week. We looked at this, or it was a runner-up last week, but we did get the breakout on it as we expected. You can see that there's still some movement left here in the PMO. It's not quite overbought. RSI is a bit overbought here, so we might be getting in. You need to wait probably for that pullback on Excelis. Dynavax.
You need to get to symbol requests.
Oh my gosh, I did. I got a little bit out of whack here. So anyway, this is where you can find those strength. Oh, that looks really good. Hang on. Still a low volume one, but I like the way that the basing pattern here, that saucer shape. All right. Yes, you're right. Thank you for being here to keep me on track. So this first one I do see is TPR, Tapestry, I believe. Yes. Ooh, I don't like to get involved in stocks like this. It could rebound here and make up some of this loss, but there was a good reason for this loss. And I don't think that I'd want to be involved in a stock that had a good reason for a big loss like that. More than likely, I'm guessing on earnings. I wouldn't be looking at this as a reversal candidate. Certainly the PMO in deep decline. If I owned this, I'd be not very happy with myself if I hadn't set a stop. And I'd probably suck up this loss. I don't know that you're going to see that much movement to the upside based on this PMO. Stochastic's trying to turn up, though. Yeah, maybe set the stop if you haven't set it already, a little bit lower here, but ultimately not anything I'd want to get involved in. And I think holding it would be adding a lot of risk.
PAYC.
Paycom, this has been one that is getting a lot of action as far as symbol requests go. Big fat decline on earnings, if I recall. And it's really not making up much in the way of making much ground to try and recover from that loss. It's a similar situation to the last one. I don't want to get involved in a stock that had a very good reason for losing that much on earnings. You're really, I know we want to find new momentum. I know we want to find those beat up stocks so that we can get in on the low side, but I just don't like what's going on here. You do have that hook coming up, but this could even be considered a reverse flag that's kind of coming in here. I just don't like it. If you own this, I'm sorry. You could maybe keep it and set your stop right down here if you really want to maybe catch a little bit back on the upside, but I don't see you getting back to where you were up here, not for a very long time.
LJR.
I'm thinking I think that's IJR, which we have a good chart for, so I'm going to go there. We have the under the hood for the small caps. All right. It's like the market. I mean, it doesn't look good. We've got this rounded top. It is sitting here on some support, just like the market is in general, the SPY, holding 50-day EMA. Certainly a place that you could look for a reversal. We do have a long tail on today's move, but still a decline, PMO in decline. And look at the participation. We're now below the 50% threshold on the percent of stocks above their 20-day EMA. It's still tapering off. Stochastic suggesting internal weakness as they sit below 20. And you can see that it is underperforming an already sickly SPY. So this is not where I want to be. It is holding the support level, but I don't know that I'd want to hang in here and wait for the reversal. I think it's very, very vulnerable to more decline.
Okay. NXE. Question is a glowing pocket of strength in materials?
Well, let's see. Non-ferrous metals. Well, this one is trying to break out. Couple of tops beneath the signal line for the PMO, but it did give us a crossover buy right now. The group itself is not really performing very well. So I would say a bright spot, it might just be this particular stock. And you can see that it's outperforming its group by quite a bit. So it's consequently outperforming the SPY by quite a bit. So this particular stock certainly does look like a bit of a bright spot going on right now. Let's look at a weekly chart, and then we'll pop into the 5-minute candlestick for trading purposes. So we're in a trading range, and we are at the very top of this range. So there is some, that's a tough one. It does look like it's ready to break out here with the PMO looking pretty healthy, and certainly the stock chart's technical rank above the 70 line. I'd say anything above 70 on the stock chart's technical rank is in the hot zone. So that means that it is in a very safe place. It does suggest the breakout will come here for this stock, but wow, it's a little it's a little, given how tight it is in this trading range, and it's been pretty much all year, really happy in that range. It does look vulnerable to turning down. I'd like to see that breakout for sure. Let's look at a 5-minute.
It's got a reverse divergence on the OBV.
Yes. So reverse divergence, meaning that you get the OBV breaks out, but price doesn't break out. Price should always follow volume. And if it's not following volume, that's a little bit of a head scratcher and should give you a little bit of warning here. This is really low price too. So if you do want to get involved in it, I would say make that position really small. The 5-minute candlestick chart is where we go when we decide we want a stock or when we don't want a stock. Once we've decided from our daily chart whether we want it or not, we go to the 5-minute candlestick chart to help us get the best sell point and to help us get the best buy point if possible. So what we're looking for on a 5-minute candlestick chart is a PMO crossover to the upside combined with a positive RSI. So this was your last buy point right here. And that would have gotten you pretty much in right after the open, just above the close on Friday. Of course, we don't have the opportunity to get in at that point, and this does look very flag formation-like. So I don't know that we're going to get a better buy point than where we are now, but we have the chance to get a better buy point simply because the PMO is moving lower. But I would be finger over the button here for the buy point. More than likely, you're going to see a breakout. That's going to be your buy point, or you can get in a little more aggressively and get in before that breakout looks like it's getting ready to occur. You can see the PMO is starting to decelerate. Now, a sell point, if you come to a chart and want to sell, all you're looking for is the 5-minute candle, the 5-minute PMO to turn over. Once it turns over, that's typically going to be a good sell point. Now, these sell points haven't worked out. That just tells you the bullish bias of this particular stock. It's basically going against these sell points. It's only leading into sideways consolidation. So that does tell me there is some internal strength to be had here on NXE.
CVS long term.
All right. Pharmaceuticals. Okay. You know, I do see a cup with a handle here, which is a bullish pattern, but the PMO is on a new sell signal. This is also kind of an unusual pattern. We don't see them very often. I'm going to take this off for a moment. It's a diamond shape. So you've got this diamond. Those are reversal patterns. So you're coming up into this, you're forming this diamond shape, and typically what you're going to get is a breakdown because this is a reversal pattern. So I don't know that I would be trusting right now to get involved with CVS. It is in the pharma area. It is one of the bright spots in healthcare. And this is typically, you know, it performs fairly well against the group, although it hasn't been doing that this year. It's really underperformed the group, and it is underperforming the group right now. So if you're going to get involved in a pharma stock, I would suggest you compare the stock to the industry group itself. The group, as you can see, is starting to outperform. You want to see the same action going on. You want to at least see it performing in line with its industry group. But right now it's not performing with its industry group. So I think there are better choices within the pharmaceutical area.
How about a weekly on that? I wanted the long-term look.
I mean, the weekly doesn't look too bad. But I don't like the setup on the daily chart. I just don't see the outperformance. Let me get this back on here to see the resistance. This is resistance. It did get above that. The next level is up here. I mean, if I were trading off the weekly chart and, you know, you wanted to hold it more intermediate term, I think there's a possibility here for more upside just based on the positive PMO. But I don't know. I think in the shorter term, you can find a better investment.
Okay, Lilly, long-term opinion.
All right, long-term opinion. Well, my short-term opinion is nice gap up more than likely. Yes, on earnings. I do recall that was on earnings. And it consolidated that move, and it's now breaking out once again. This is certainly a bright spot within pharma. I'm guessing that as far as cap weighting, it's right up there in the pharma area. You can see that because notice here's the group and how it's performing, and look at what's happening with Lilly. Basically, when it started to take off, the group started to outperform as well. It's very, very overbought. Long-term look, let's look at a weekly. Actually, let's look at a weekly that's bigger. There we go. Seems like I should have more bars on here than I'm getting. Yeah, I mean, I think the weekly chart looks good in a long-term picture. Let's go to a monthly if we really want to get long-term here. This is a bit of a problem. You know, you do have this parabolic move. It's almost vertical right now. It just begs to be broken. I think there's more upside ahead for Lilly, but I'd be really careful. I'd make sure that my stop was set, you know, maybe have it trailing if it's a long-term hold, just because that parabolic looks really dangerous right now.
Okay, here's a note. Love my Etron, and I'm not worried. I'm not sure what Etron is.
Yeah, Enron doesn't exist. Why is that coming up?
Right.
Yeah, E-tron. Yeah, I don't know. You'll need to give me a symbol, Lisa. I'm afraid I can't comment on what you have here.
Okay, NEOG. Is it a buy?
Well, it's certainly getting a nice breakout today. PMO is turned up. Performance in line with the group, and the group is starting to outperform. So that's all good. Stochastics in a declining trend while price is kind of in a rising trend. That's a little bit of a problem for me. RSI positive. I mean, everything's going well on this chart. Let's look at it in the weekly version here. I apologize. I need to make this weekly chart a little bit bigger. If I do this, I need to fix the time frame because this is not doing what I want. Kind of a double bottom look here, but I like that breakout. Let me get back to this one. I apologize, it's so small. Yeah, that's really where the next level of overhead resistance lies, and it's really not that far away, maybe about 8%, 7.5% to 8% before you hit resistance again. But looking good on the weekly chart. I don't see anything wrong with this one. Let's go to a 5-minute candlestick. Okay, you do not have the buy point, and this is really the setup where you want to wait because the PMO is on a sell signal. This would be your sell point if you were coming to the chart to sell. You don't have to wait for that negative crossover, but if you came here and you wanted to sell, this is certainly the sell point. I think you want to wait on this one before you plug in. If you want to get a better buy point, wait for that 5-minute PMO to at least flatten out, maybe start to make the turn. This does look flag formation like, so it does suggest that we will get the breakout eventually here, but I'd want to get in at the best price. And I think you're going to get a lower price point to get in.
Okay. EWZ.
The Brazil, hitting support here. PMO in decline, stochastics very, very weak, RSI negative. This really begs for a breakdown here. I would say if you look right here, this is really the strongest level of support. This looks double top-ish. So if it comes down here, that would execute the pattern. You would be confirming that double top. And that would imply a drop of the size of this pattern, which would bring us down to this level of support. I don't like this one. I definitely wouldn't be looking at it as a long. And if I owned it, I'd have gotten rid of it already. This is a reverse flag right there if I've ever seen one.
Okay, TECS. The comment is still long hedge question mark. I'm not sure what that means.
Right. Still a hedge. This one was it last week or the week before? DecisionPoint Diamond on ETF day. And I did mention this on an interview I did Sunday, I believe. I think I mentioned this also in Your Daily 5 last week as a possible hedge. I wouldn't call a long. Any kind of hedge for me is short. So a short term, I'm guessing long on the buy side. I still think technology looks very weak. Yes, we're having a bad day on this. This is a hedge. Hopefully your other positions are doing well. That's why we have this, is in case things go the wrong way. But that's a big bearish engulfing. So I do see a bit of a problem ahead here, possibly. I, for full disclosure, own this particular hedge. I'm going to keep this hedge on. I think if you're really nimble and you wanted to get out and get back in, you could do that, because we are hitting some support right now, and it wouldn't surprise me if we didn't consolidate a little bit here. But overall, I still think the market is very weak in the intermediate term, and I would expect this particular hedge to continue to serve you well. Like I said, I'm sticking it out for a little longer.
EVLV long, 2 minutes.
Okay. Really nice breakout and follow through on this PMO buy signal. I like the look of this. I'd really like to get it on a pullback, though, rather than right now where it sits. But I think this does look like a pretty good long. 5-minute candle. PMO getting ready to turn up. It doesn't seem like the decline did much for price. So this has a bullish bias to me. It looks like we're going to get follow through. So I do like Evolve. I think that looks pretty good on this breakout. And I think that's it. No, we've got time for one more. Pinterest, I see in there.
Pins and Paul, if you have time.
Yeah, I think I have a little time. Pinterest, no, don't like it. Double top, confirmed. PMO in decline. Drop below the 200-day EMA. This looks more like a short than a buy. And Palladium, I'm guessing, yes. Not doing much here. It doesn't look bad, but it doesn't look like anything exciting that I'd want to get involved in. PMO doing what it needs to. I mean, if I owned it, I'd continue to hold it, but I don't know that I'd be jumping in here. There's just not anything that's that exciting about the chart. That should do it. All right, guys, it was a pleasure to be with you this Monday. The recording does go up on YouTube. So, of course, a lot of you are watching it on YouTube. If you want to join us live, you can go to our website on our homepage. You'll see the link to register to join us live on Mondays at noon Eastern. And then you don't have to wait for the recording. That's all we have. We want to wish you good luck and good trading.